Have you ever wondered what an investment banker does? Well, they perform a lot of functions, but one thing that they often do is propose investments to their potential clients. Hey, what would your income statement and your balance sheet look like if you were to make a certain investment versus not? We might call this financial forecasting, and that's exactly what we'll do today in this video. Hi, I'm Brian Amrine with Value Driven Analytics, and I hope you'll come along with me in this journey as we look at financial modeling in Excel. Along the way, we'll learn several Excel functions, like how you can add coloring to highlight certain cells, how you can put borders and lines around cells. We'll also learn some general financial concepts, like what an income statement looks like, cost of goods sold, profit margin, etc. If that sounds good to you, let's head over to Excel. If you've ever thought about becoming an investment banker, this next Excel demo is for you. We're going to take a lot of the concepts that we covered in the personal finance demo, but this time apply it to a company that's considering making a particular investment in a way that an investment banker might use to sell a company on why they should pursue that investment and how it would impact their income statement and balance sheet if they made that decision versus not. It's another good example of how setting up inputs that can be changed can automatically update the rest of your model in Excel, which is a way that Excel is unique among the data analytics tools we're looking at. So let's do some financial modeling in Excel. All right, here we are back in Excel and we're ready to do some financial modeling. Again, a great use case if you've ever thought about becoming an investment banker. Our scenario today is we're performing an analysis for a golf company that sells drivers and perhaps other irons as well, certain types of golf club. But we are considering buying a company that sells putters. And the investment bank or the company themselves thinks that there could be an opportunity to see some synergy here. We could potentially combine forces, produce things at a lower cost. We could boost our sales. And we want to see how that would impact both our income statement and our balance sheet if we made that decision to invest and buy this putting company, or if we didn't. What would the difference be in different areas of our net income and our balance sheet, different aspects of our balance sheet? So we're a golf company that sells drivers, considering buying a putter company. That is our scenario. And so what we'll do today is build this out. We're going to build it out from scratch. So I'm starting with a brand new Excel workbook. Go ahead and open that up. And what we'll do is this time, it's going to be very similar to the personal finance use case, but this time we're going to spell out our inputs to our model at the very top. So our inputs will be things like what is our standard annual sales growth going to be? Just what do we expect sales, how do we naturally expect our sales to progress over the next years on average if we weren't to do anything differently? And then we'd need to maybe have an input for our current gross profit margin. It's the percentage of our overall top line revenue that we would actually get to keep after removing the cost of goods sold. So we'll have that as a variable here. Let's also create a current, sometimes you see the line item in income statements, selling, general, and administration percentage. And this will be a percentage of revenue. Let's make that clear. Put an extra period here. Another input that we'll look at is the interest rate that we get. We'll actually have a separate interest rate for the interest rate on cash, which might be a money market rate, so very liquid asset rate, and then versus maybe an interest rate on other assets. And then we'll also do a tax rate here. Let's call this a. All right, so those are our inputs. I'll double click the right edge of column B to expand it so we don't have any cells getting cut off. And then let's also populate what the actual values are. So we'll assume that our sales are expected to increase year over year over year, about 4% year over year on average. And our gross profit margin we'll say is 40%. To keep 40% of the revenue after accounting for the direct cost of goods sold, the cost to make drivers and irons. Then our current selling general administrative percentage, let's say that's about 15% of our revenue in total. Say our interest rate on cash, we'll use kind of a high rate of 6%. And then our overall interest rate on other assets, let's say is 8%. Say our tax rate is 25%. And there we go. We've got our inputs. Let's highlight them in yellow. Could use any color for that. Let's center this. I'm going to go ahead and go to view, turn off grid lines, and we've got a good start here. Now that we've created our list of inputs, let's go ahead and start creating a no change scenario. And so maybe a few cells down, I'm going to call this no change scenario. And eventually we'll create a with change scenario over here. For now, we'll just call this no change scenario. And let's say we're going to forecast out for several years, starting with 2023 and beyond. And so I'll do that here. Very similar to the personal finance use case. I'm going to make this dynamic where I just reference the cell in the previous column and just add one. I can drag that formula over. We'll go all the way to 2032. Again, we can highlight these and see that that's 10, delete 2023. I'll center these. Now the first statement we're going to look at is the income statement. I'll actually insert a few rows above this, right clicking, insert, and call this the income statement area. Income statement. Might really want to highlight this. So I'm similar to what we did with the expense section and the income section. I'll bold this, put a border around it, and I'll color it green. Income statement. And I also kind of do the same thing here. In fact, I might use the format painter here, format this no change scenario, maybe give it a different color. And there we go. We have our no change scenario. Now we're going to need to do some labeling coming up. So this is going to be our section for our line item labels. The first item we'd have on the income statement is our revenue, and so we might create a whole section for revenue potentially. I'll do that over here. Call this our revenue section. Merge cells, put a border around it, maybe bold it as well, revenue. And then below that, our first line item, actually our only line item for revenue. You can feel free to update this and change it to whatever scenario you think works. But we'll do sales, and that'll be just our only revenue generator. We won't split it out any more than that. Similar to personal finance, you can get as granular as you'd like. Maybe you split sales out by different types of sales or categories of sales. But in this case, they'll all be one value. And I guess to start, we need to come up with a starting sales amount, and maybe that could be a parameter in itself. So I'll go back up here and insert another parameter here. Let's call this our starting sales value. Maybe we do, let's do maybe 200,000. That'll be our starting sales value, and we'll make that yellow as well since it's an input parameter, which means down here we simply point to that, 200,000. And similar to how we expected our income to have a 3% increase year over year, each year on average, in our personal finance example, formula will be very similar here. We'll reference the prior cell, multiply by 1 plus this expected 4% annual sales growth. There we go. We'll drag this to the right, and we have a sales forecast. It doesn't look right. This 2024 looks okay, 208,000, but then it stays at that level. Made the same mistake that we did in personal finance where we didn't lock the cell in, so it continued to drag over here. Now again, if we had a different expectation for what that annual sales growth was going to be year by year, that would work just fine. We'd need to populate it. But in this case, we just have a general expectation for the next 10 years. It'll increase on average by 4%. And so we want to lock in that cell. I'm going to use the F4 shortcut to lock in both the column and the row. Really, we just need to lock in the column, especially in this case. Drag over. That looks a little better. Got a good sales forecast year by year for the next 10 years. Looking good. Well, the next thing we want to do is have a cost section, and I want to have a kind of a section label similar to revenue here. So I'm just going to copy that, paste it in the first cell where I want that to start down here, and then I'm going to call it costs. And the only line item in here, and you could get more granular, is going to be cost of goods sold, and that will be a simple formula. It'll be our sales times, and then in parentheses, to denote the order of operation, we want to do 1 minus what our gross profit margin assumption is of 40%. Okay, so that'll be our cost of goods sold. Looks good. Looks good. So now from here, we can use kind of an underline operation. For spacing reasons, I'm just going to put the underline. I'm going to skip a space here, and I'll put a bottom border here to denote the fact that in this case we're doing a difference. It's very common, again, to use a line to represent a sum or a difference. So we're doing a calculation here, and the calculation is to calculate the gross profit, and that is simply the sales minus the cost of goods sold. Drag that over. So what we've been doing so far is clicking in the bottom right corner and dragging down. You can also drag over. Something doesn't look right there. Okay, that calculated just fine. What happened here? It looks like the problem was with our cost of goods sold. Let's check that. Oh, the locked cell got me again. All right. Important to apply sanity checks to check your work, and that's kind of what we're doing along the lines. We're looking for things that look out of place. This $0 definitely looks out of place. I'm going to double click in here. 1 minus the 40%, and we've got to lock in that 40%. I'm going to click F4 as I've highlighted. I have my cursor on C7. Great, that should be a little better now. There we go, there we go. So we expect our gross profit to go up over time. We expect our sales to go up over time. Looking pretty good overall at this point. Let's do the same thing and start to create another section for operating costs. That'll be the next thing we kind of subtract out. Call that operating costs, and that is where our selling, general, and administrative costs come in. And that'll be a percentage of our revenue. 15% of our top line revenue will be assumed to go toward selling, general, and administrative cost. I'll say equals sales times 15%. And this time, I'm not going to forget to lock the cell. Click F4, and there we go. We've locked it in. Drag that across, and we've got our selling, general, and administrative costs all plotted out by year. Looking good. And now we're able to do another calculation. So I'll I'll highlight the cells above which I want to put this bottom border. Select that. Got a border here, and this will be our earnings before taxes. Really before taxes and interest as well. Great. So I am going to, the earnings would simply be, here's what we brought in, our top level sales, subtract out the cost of goods sold, and subtract out the general administrative. Actually, we've already done this calculation of the sales minus the cost of goods sold. That's our gross profit. So we'll start with that, equals the gross profit minus your selling, general, and administrative cost. Did equals there instead of minus. Drag this over. Great, we've got our forecasted earnings before taxes and interest by year. Perfect. Well, the next section, now that we've calculated that, is to have an other revenue and expenses section. And this will include our taxes and different forms of interest earned and paid. So we'll call this our other revenue and expenses section. There we go. We'll have 3 line items here. First being interest earned, interest paid, and taxes. Depending on how the company sets up their income statement, there could be different line items in any of these sections, but that'll be what we use for this example. So those 3, and then eventually we'll be able to take those 3 and do a sum of them. We'll go ahead and get that ready. A sum of them to get our total expenses for that section. But then we would take those expenses and we would subtract them from our earnings before taxes and interest to get our net income. So we'll go ahead and set up all of those sections here. Our interest earned is going to be a function of, one, what our interest rate assumed is, which is over here. But the other thing is actually going to come from our balance sheet, which we'll create below. We haven't created that yet, so this is something we'll come back to because we're going to want to point it to whatever our balance was, similar to how we calculated our return on savings in our personal finance example. Interest paid, also a function of what our long-term debt was, which will be on the balance sheet that we create below. So we're not ready to populate that either. Now taxes, we can populate. Let's say taxes are a function of our earnings before taxes and interest, and then we would want to, in reality, have different taxes perhaps for capital gains versus your regular income. But in this case, we'll consider everything together. We're simplifying here for this example. So we'd say earnings before taxes and interest. We want to add the interest earned. That'd be considered maybe revenue as well. Again, probably tax at a different rate. Simple example. And then we'll subtract out our interest paid. Eventually these will be populated. We're preparing, assuming they'll be populated here. So that would be essentially what we need to pay taxes on. So we would take that, put that in parentheses. We want to do that computation first, and then multiply by our tax rate. Not going to make the mistake of not locking in the cell. My cursor's on C11 here. I'm going to press F4, locks it in with the dollar signs. Great. There we go, 12,500. Now, if this were negative for some reason, let's say our gross profit margin was a little bit lower. Let's say it was more like 10%. And we actually have a loss. This would suggest our taxes are negative. That doesn't really make sense. So let's apply, we're going to use a function here. We can use we kind of want to say, okay, whatever the maximum is of that computation of what our taxes would be, or 0, which will, if your calculation ends up being negative taxes, I'll just replace it with 0. And that's what happened here. I'll change it back here. I just wanted to show that as an example, or go back to a profitable company with a 40% gross profit margin here. And there's our 12,500 tax amount. Now, in reality, sometimes tax credits can get carried over to the next year, so perhaps it wouldn't be as simple as putting in a max statement there, but we'll just assume that, all right, if you don't make any money, you don't get taxes, and then the next year if you make money, you start paying taxes on whatever you made that year. Just very simple example. And to calculate our net income, we would say, well, here's our earnings before taxes and interest. Let us add to that the interest earned. Let us subtract from that the interest paid. And let us subtract from that our taxes. And there we have it. Now we still need to populate these two, but for now, without any interest earned or interest paid, we would have a net income of 37,500. We need to drag over both of these formulas. We'll worry about interest earned and interest paid after we populate the balance sheet, but let's drag this over as well. And hey, we've forecasted our net income over time. That's pretty neat. If you like this video, I hope you'll consider liking it formally. And if you'd like to see more analytics, data science, and leadership training videos, please consider subscribing to the channel. Finally, if you have any questions on what we discussed today, please leave a comment and I'll try to respond to it as soon as possible. Thanks again for watching, and I'll see you in the next video.